Hi, everyone, and welcome back to another Sunday Scan. If you are joining us for the first time, we are Investors Underground, and we put out a free weekly watch list and scan every single week. So make sure that you are subscribed to that channel. And we also put out a bunch of other great content like the Trader's Journey, where we have interviews with different notable people in the trading space. And then we also just posted a recent video of some live trading action from some of the Investors Underground moderators, including myself and Stan, where we went through a deep dive on the stock ATCH and really trading that live in one of our midday study sessions, which we do, where people ask questions and we walk through different concepts. So we just posted that video recently. So if you haven't seen it yet, I highly recommend that you check that out, because it's kind of a look into the mind of what being a professional trader is all about, and all the things that you're taking into account when you are placing a trade, when you're focusing on your risk management, when you're focusing on, do I think that this is near a trigger point? Is this going to have another big move? When do I flip my bias from being more long bias to maybe being more short bias on something? Reading, the level 2, and all these different factors that kind of go into placing a really good trade. And I think it's a good way for people to see, how much goes into that, and how having experience in a community can really help you, sort through that process, as opposed to trying to hack it all on your own. So highly recommend that you watch that video that Stan and I just recently put out. There's a ton of things to go over for Scan this week. The market has been extremely hot. We recently had the Fed, cut rates into basically a hot market. Just because the labor market is weakening a little bit, and inflation has been around that 3% mark, but it's still been somewhat capped for right now. So in some ways, the Fed is almost forced to start cutting. And what can happen is that if you have asset prices that are already hot and the stock market's already at highs, but the Fed is almost forced to cut anyway, that's when you can start to form some of those, bubble types of moves. And we've seen that in 2020 or 2021 and many other periods. So it's just kind of a good reminder and a good note that, this is a lot of money sloshing around in the markets right now, partly due to macro factors, partly due to, a number of things. But it's really just a good reminder that everything is cyclical. You have these periods where you have almost bubble type of action forming, where you have all the short interest stocks squeezing, a lot of the mid cap stocks like the quantum names and the AI power names and the nuclear names and all those going nuts. The U.S. mineral names and everything that is in the sector, everything that's mid cap. Hedge funds can buy huge amounts of options on it. They're very liquid. They can push them around, and basically you start to have retail do well in a bunch of these different sectors. And then as they get more money, then they use that same principle and concept into other sectors, and the cycle just goes on. And so if you're seeing a cycle like this for the first time, it's really just to be aware that this is very, very common, and it might only come around every couple of years or every 5 years or something like that, but it happens very regularly. And as you see a bunch of these cycles kind of play out, you will get more experience, and you'll be able to navigate them a little bit better. But in today's scan, I'm going to talk a little bit about sector moves, about how to potentially play them on the long side, what to potentially look for on more of the short side, or if you're playing with options like I play a lot of options on these names. So if you're looking at like a puts trade or something, what are some of the signs that you can look for that? So make sure that you watch until the end of Scan today, because I will pull up a chart and we will go through a bunch of these names. A couple other things to really, that I really want to chat about on Scan today is that, during these cycles, when you have, a lot of people doing super well in the markets, some people, who have been a little bit more new, maybe they hit some really big sector trades. Maybe they were early in some of the names like the quantum names or things like that. And some people have made very significant amounts of money. And, it's just a good kind of comparison of how just because someone's portfolio is growing and just because they're doing very well, there's things to think about in terms of risk, in terms of future periods and things like that, that I think will be helpful. Because again, all of us, all the moderators at Investors Underground, we've been through many of these cycles. And, we were once, much more new than we are right now, and experiencing these things for the first time. So I'll give a couple of pieces of advice from some past cycles that I've been through. And the first thing is that if people are making kind of significant life-changing money, where people go from maybe they were making a few $100s a week or a few $1,000s to now they're making the same amount as their job or things like that, and the numbers get bigger. One thing to keep in mind is that your risk control should reflect that along the way. So, for instance, if 2 months ago someone was comfortable with losing $500 or $1,000 on a trade, but now because their portfolio has grown and positions have gotten much bigger, now positions are falling by 30%, and now they're down 20% or $20,000 on one single trade or something like that. And in the grand scheme, it doesn't seem like much, but if you were to remember in real terms that that's still a significant amount of money for the vast majority of the world, and to kind of be aware of that and don't get too reckless where just because things are going well that now you're throwing around tens of thousands or whatever the amount is like it's nothing, because it still is significant profits and things like that, especially if someone is still working a job and if they haven't made the full transition to a full-time trader yet. So that's just something to keep in mind, that just because things are going really well, you also want to keep your risk in terms of real dollars and how that could impact someone's life. And the other piece of advice that I would really give is that during these great periods, and if people are doing very well, one of the best things that you can do with some of the profits is to de-risk your own life. And what I mean by that is making yourself in a strong financial position where you're basically debt-free. You have savings, reserves, and basically preparing for times where that could really come in handy in your own life, or preparing for big purchases or things like that. So not to get too far on tangents, but we see this happen all the time, where people come in for a hot cycle, they make a ton of money, and then unfortunately, I would say probably 85 to 95% of the time, they overstay in that cycle. And whether it's a year from now or 6 months from now or 2 months from now, most people give it almost all back. And so I would say that a great piece of advice is just to de-risk your own life. If people are still being aggressive with their positions, with their holdings and things like that, you will never ever regret paying down debt, getting yourself into a solid position, building up reserves, and basically knowing that this is part of a cycle, and things don't last forever. So to make sure that you are setting aside certain things, and to really put yourself in a good position. And Nate has a great quote, and he says that you only have to get wealthy once if you do it right, and then the hard part is kind of keeping that. And I remember he said that during 2020 when I was watching him on Sunday Scan, and that really resonated, because I saw so many people, including myself, after a period of like that of 2020 and 2021. You get hit with a 2022, sometime in the future after that, and just so many people gave back so much money that they made. So I would take that advice to heart, and just put yourself into a good position, and really focus on making yourself financially resilient, and living within your means, and then not getting too crazy with purchases or things that are not really that necessary. So for someone who wants to have a long trading career, especially if you're interested in making the transition to more full-time trading, that is a huge element of that. And people who don't kind of set themselves up for that, they are playing a much more dangerous game if they eventually transition to a full-time trader, than someone who is thinking ahead and preparing for good times and slow times and everything in between. So just a couple of pieces of advice for someone who's been around from a couple of cycles there. So I will start pulling up some charts now. We will go through a bunch of moves. And before I get going, I will just remind everyone that I'm not a financial advisor, and these are not buy or sell recommendations. Everything I'm going to talk about is for informational and educational purposes only. So the first thing, so like I mentioned, the Fed is now cutting into kind of a hot market. And what tends to happen is that you have indices like IWM, which is small caps, really tend to outperform. And I actually think it's good to go through some different analogies from the past. And so you can see, this was the big COVID crash down here in 2020, and you can see how hard that small caps get hit there. So after that huge flush out, it rebounded pretty well. And then, you had the Fed doing a bunch of stimulus and easing, much more so than they are right now. But that was really what fueled that whole next leg up in small caps. And that was that crazy time. And so if you fast forward, a couple of years, we're basically in a somewhat similar situation, I think, where we had the big, tariff crash here, and now we're kind of back up at the highs. And if the Fed kind of stays on the track that they are, and they continue to cut and asset prices continue to rise, and they don't really change their narrative, or they don't really change their actions based on that, then I think that we could have a massive breakout. We're already starting to break out, and that cycle can go on for a while more. So another thing I wanted to point out is this BE trade that we've had as an idea. If anyone participated, this has been almost what I would consider a pretty picture perfect swing kind of trade, and really what you want to look for. And that's where you have, the right kind of market, you have the right kind of catalyst, and then you basically have the technicals line up with that, and you have the volume, confirm as well. So Stan and I were on last week, and we were talking about how, especially for people who have participated in a name like this, it's a very prudent thing to basically just be trimming along the way. And it's like the topic that I brought up before. So let's say someone had $20,000 or $30,000 or something that they put into a stock like this, and now it's doubled or it's tripled, or whatever it is, and now someone's with this stock were to dip by 15 or 20%. That's a huge amount. That's a huge amount of relative risk that they are now exposed to, that they weren't necessarily exposed to, several months ago. And so that's just something to keep in mind, that it's helpful to trim along the way and to keep yourself in a good, resilient position. So that way, when it eventually does have that big mean reversion, that, someone is not like, oh, I just gave back, a month or 2 months of, all this progress that was made. So just by chipping away, paying yourself, if it's going up, 5 or 10% most days, or if it's going up 20% a week, then just kind of, chipping off little bits. You can still maintain a relatively similar position size, but just kind of paying yourself as that plays out is just a hugely important concept, especially to keep yourself in a strong financial and, mental space as these cycles go on. App, I want to recap this move too. So we talked about this one a while ago. This was added to the S&P 500, and it was kind of a unique situation. Well, it was announced it was going to be added to the S&P 500, and because the S&P 500 is a market cap weighted index, basically the bigger the company is, the more the index has to buy. And so App had some problems, earlier on in the year with some short reports and things like that, which basically, I think made some people hesitant to add it. But the problem is that it got so big that by the time they did add it, they had to buy, a ton of stock to basically have the proper weighting into the index. So it gets added very soon, but you can just see that this part right here is all, basically imbalances from the index having to add. And you can see that reflect, that is not a normal volume profile there. And you can see that, that's a good way to understand what is actually happening. That was kind of a unique situation. So I just wanted to highlight that because that was on watch, and we kind of talked about this situation over the last few months. A couple things I want to recap too. These are just kind of more general market thoughts, but we've seen some rotation, I think, from some of like the big AI names like NVIDIA, which recently had some deals with Intel and things like that. Some names like Avgo and some things like ALAB. You can see that these, while everything else, especially in the mid cap or the small cap land, is kind of ripping. A lot of these, which have been like the market darlings over the last several months, and obviously NVIDIA for the last couple of years, but you can just see a little bit of rotation, maybe out of these and into some of the smaller names like the quantum names. So it's always good, even if you generally have a more bullish bias on the market and everything like that, I always like to think about where is money potentially flowing from, where is it potentially flowing to, and just kind of observing that. And that way you can keep kind of a more neutral and objective tone. So I think that those are good things to keep in mind, especially if the market does start to come in a little bit. You have some areas that you could focus on possibly for trending stocks, and then also mean reversion stocks. So I always like to keep track of what is acting a little bit different now than it was, even a couple of weeks or months ago. So those are some names to keep on watch for possibly some outflows. So I will get into the main watches for this week, and I will start with IONQ and the quantums. So basically, we've seen this run in past cycles as well, where the quantum names, very early, speculative, technology, things like that, but they have the right market cap size. They're very liquid for hedge funds and other people to get in here. And then also they have good catalysts. So if the US now has, announcements that they're trying to develop their quantum strategy, or, whatever that means. Basically, it's enough in this kind of environment to attract money to the whole sector. So even though IONQ is the one that is, getting most of the catalysts, you also have some sympathy trades, and RGTI also had some, good catalysts as well. But things like QBTS and QUBT, a lot of these are more just they're in the same sector, and so sector trades are a little bit different than standalone trades. So basically, when you have sector trades, here's how I kind of visualize it, and I think that it might be helpful for some people. So when you have an individual stock, let's say it's any one of the small stocks that have been running recently or in the past, you basically have a company put out a press release and they try to drum up some interest or try to get some money to flow into the stock. And then basically, they churn it and they try to, drive it higher. Sometimes shorts get trapped and you have a big squeeze, and then they tend to raise money into that. And that kind of is the end of the life cycle of a lot of small caps in general. But when you have sector trades, it's a little bit different. Instead of the company themselves just trying to drum up money for themselves, a lot of times you have money that is looking for, exposure to that sector. And so, it's a much easier way for money to flow in when there's several large liquid names and a narrative, and everything is kind of being set off. You have the right environment, you have catalysts, and all that stuff. So I think a good way to kind of play sector trades on the long side is to look for those leaders. Basically, what actually has the best catalyst, the best quote unquote fundamentals. None of the, barely any of these companies actually make any money, but I say fundamentals in terms of what could actually resemble a real business at some point in time. And so you tend to gravitate towards the names like the IONQs or things like that, and those will lead the sectors higher. So a good way to participate in these on the long side, like in the earlier stages, you can see these big breakout levels. You can see, good catalysts. You can see the volume confirming that. So those are good ways if you're kind of early to that breakout. But if it's already kind of ongoing, then a lot of times, a flush in the morning and then a save, that's what you're seeing around these areas when you see these candles kind of stack on top of each other. So a lot of times that dip, it's, something sometime in the morning, and it's very frustrating to a lot of shorts because they're like, they see that weakness in the morning, they chase it, they get squeezed out, and it just kind of happens every single day. And so from a long perspective, a lot of times what can be helpful is to basically look for some kind of a morning dip within the first half hour. And then you're looking for it to basically, get saved into some kind of prior level. And then you can almost assume that as long as the sector and the other names are still bid, that, a lot of times that's a good risk area to use as low of day if you want to participate in, a 5 or 10% move if it gets there, while the stocks in the market is trending that way. So that's a good way to participate on the long side. And then if you're more short biased, or if you want to play this with puts, then, if you're looking for more of a mean reversion trade, there's two different ways that I tend to kind of go about these. One is to look for the most overextended name when it finally kind of collapses on itself, or the other thing is to look for relative weakness. So for an overextension, a lot of times you're looking for several things, like obviously, a big move compared to prior action. And then what I like to see is, these candles, the daily candles, start to really speed up. You'll see the volume, go into multiples of what it normally is. And that's usually a sign that, it's getting to some kind of a short-term blow-off point. All the shorts are blown out. You have a lot of longs chasing it, and you have the technicals way overextended. And then you're looking for like a first red day or Thursday, Friday with some of the options stuff on some of these names. And you're basically looking for when it's starting to act a little bit different, it's starting to act weak, it can't reclaim prior levels. And that's usually a time to participate in, some of the mean reversion trades. Or another way that can be a little bit more simple is that if you think that the sector as a whole is going to be involved in a mean reversion trade, or basically pulling back, you can look for relative weakness. And so if you were to look through the quantum names, you have IONQ, QBTS, QUBT, RGTI, you're just looking visually at, what looks like it's a bit of a laggard. And I would say that, like the QUBT, something like that has been much more weak than some of these. If you look at, how far past this is above prior highs, if you're looking at how far past this is above prior highs, you're looking for something that's still struggling to break out some of those prior highs. It's already way overextended. Maybe it had a short squeeze in there. So on days where you think the whole sector can come in, I try to look for what is the weakest name, and then on that day, what is acting weak. So if IONQ is up 3% and RGTI is up 5%, but QUBT is red, that's a good sign that if the sector comes in, I want to be in the weakest stock if I'm going for like an all-day kind of trend. And again, those tend to happen the best when there is a sector catalyst. So we've had it before. Like remember, NVIDIA CEO was saying that quantum, won't be useful for the next 30 years or something like that. And that was this flush here. So that was like a counter trend catalyst. So you have this trend here, and then you have a big thing that could throw off, basically the whole narrative. And then that can cause big mean reversion trades there. And then you basically have the sector reset. Jensen changed his tone a little bit, and you basically have the same exact process playing out. And so be on the watch for counter trend catalysts. And then you can either go for the name that is the most overextended, that is showing weakness now, or you can go for relative weakness. And those are good ways to kind of think about sector trades and the mean reversion, and also the long side as they are breaking out. So those are a couple of things to watch for in the weeks ahead, or especially in the week ahead and a couple of days ahead, especially. I want to go over this AGMH. So this was a really powerful runner a couple of days ago, sometime last week. And I want to recap this move. We've seen this time and time again in this market cycle. This is very common where you have, some kind of a small cap company have a catalyst. Sometimes it's a theme catalyst. Sometimes it's on its own. And especially if there's only one or two that are super liquid and running on the day and sub hundreds of percent, you just have to think about where are all the short sellers? And there's a lot of short sellers out in the market right now. Where are they looking to participate? And if they're all chasing the same name, that means that it gets extra crowded. So what I like to look for on these day ones of like the names that are up, 300%, 500%, or they end up going 1,000% on the day, I'm usually looking for something that is, bid up, especially in pre-market. And then if it's crowded, if I think that, there's a ton of volume in there, if I think it's short crowded and I think it could potentially squeeze out, what I'm looking for is for a morning flush, basically to look like it's going to break down, but get saved into some kind of prior level and then start to build up above VWAP. And then you can usually assume that there's a good amount of shorts that are trapped in there from this morning dip, because everyone's like, oh, it's up 100%, 200%, whatever it is. It flushes off the open. Everyone's waiting for that mean reversion. But if all the shorts pile in and it gets saved, especially within the first 15, 20 minutes, that's usually a good point that you can risk against. And then you're looking for it to kind of make a higher low, maybe base above VWAP. And then you can assume that it would have a potentially big squeeze out that you can participate in on the long side. And then you just have to say, okay, if this is a low float and everything, can this, retrap again? And sometimes you have that second leg. And then after that, that tends to be, after either a big second leg or sometime in the afternoon, that tends to be when the supply demand profile kind of shifts on some of these stocks, and they're much more vulnerable to a big trend down. So after that day one kind of move and that pattern, which we've talked about before, I like to put these on watch for the subsequent days as a potential liquidity trap candidate. So a liquidity trap is simply a name that has a ton of volume on a day, and then it kind of consolidates for maybe 1, 2, 3 days. The volume dries up. So if the volume was 200 million or whatever it was on this one, maybe it goes down to 20 million, maybe it goes to 2 million. And so basically, if you have all the shorts that are riding this down from here, after a couple of days, if the volume dries up and the shorts are still in there and it starts to tick back up, then a lot of times the shorts have to get out, and the process of them covering, because there's very little liquidity, can push the stock up. And that's a move that people can participate in on the long side. And that's one of the patterns that I look for in the market. Another name that is on watch is going to be this UU. So this is like a rare earth / uranium name. And we've talked about these. You have names like MP and a bunch of the other ones. USAR, I think, is one of them. Basically, anything that falls into, again, that sector trade. So just like with the quantums, if you have some kind of a sector catalyst, you have the government saying they want to pile up uranium reserves, they want to form rare earth strategic reserves, they want to do all these things. They're throwing some money to make sure that the U.S. can supply their own things. Then you just have to look at what are the companies that could potentially benefit from that. And then as long as that narrative is in place and the technicals line up, again, using things like, dips against recent levels if you're participating on the long side, and then waiting for that to really speed up and go parabolic before switching bias for more of a short bias. And again, people can scalp long or short a lot of these things any day. But if you're looking for some of the bigger moves, it helps to zoom out and really, understand, are you participating in an overall trend higher? And then, once it starts to really overextend, then you're looking for that mean reversion, which is really just a trend, lower short term. Even if it gets caught eventually and, bases again, you're looking for a short term trend change. And then a lot of times those happen when there's overextension and a counter trend catalyst. Um, Another name, so this is ATCH. So Stan and I, we have about an hour-long video that we just put out on the channel. So again, make sure that you subscribe and check out that video. But we did a huge deep dive into this name, and we traded it live for people in Investors Underground, and it ended up working out in a way that we went over a ton of detail. And we're like, let's share this with people who are not members as well, so they can kind of get a glimpse into some of the study sessions and some of the ways that we're thinking about trading as we're in it. So this was an example of a liquidity trap. Big move up here, and I'll put this down into a smaller time frame. So this is kind of the liquidity trap that we're talking about. How our stock goes on a big run, it has a ton of volume associated with it, and then it dries up for a couple of days. The volume goes away here and then starts to get back up to the average cost that the short sellers are in. And then if it gets above that, it tends to trigger a move. And then again, you can have that first leg, some consolidation, that second leg, and that tends to be when the stock gets more vulnerable to that mean reversion, and then eventually a round trip. So if you were to look at other names like THAR and IPDN, these have been a good template for how these stocks play out. So that big first move up, consolidation, second move, then it cracks, then it retests, and then like that slow fade back. So you can see the same thing with IPDN. First move, consolidation, second move, retrace, round trip. So I think with ATCH, that's probably where we're at. First move, consolidate, second move, now retrace, and probably a full round trip there. So another name to keep in mind if you're more of a short bias trader for the week ahead that pops against resistance levels or any kind of clear outs. And clear out is just a term that means like to clear out price sensitive shorts along the way for the most part. So as it pops a little bit in the morning but fails, then you can potentially participate on the short side if that's something that you do. And again, not everyone is a short seller, but for those that are, you could potentially have an idea there. Open. This has been a couple of weeks ago, I actually talked about how when there's not a lot of runners, retail tends to consolidate into one name like this. But now, especially since the Fed rate cut and some of the other sectors like quantum have picked up, it's kind of the opposite. So after you have a bunch of money going to different places, sometimes you can get some stalled action in the previous name that was kind of taking all the liquidity and the excitement in the sector. So this is just kind of consolidating, and you basically look for two things here. If there's no catalyst, you're looking for it to either consolidate and continue higher, break out, or to consolidate and fail to follow through, which is the opposite basically of a breakout. It's kind of a reversal pattern where it consolidates, but it can't break the highs, but it does start to break the lows. And you're just trying to think about if you were long for most of this move, or if you were long and adding, or if you were new long up here, where would you start to stop out if this was going against you? And it could be, around that 9 level or somewhere in the high 8s. And then basically if that breaks, then you can have a big retrace there. So that's another name. And then finally, we have the nuclear sector, same exact playbook as the quantum sector, where you have your leaders. So OKLO is kind of like the IONQ. And you have SMR, which is a little bit weaker, and NNE, which is also a little bit weak too. So if you're participating on the long side, usually like to stick with the leaders with the best catalysts, using something like low a day. But as they start to really overextend like this is, you tend to have a better chance at a great trade if you flip your bias to a mean reversion one, but you're waiting ideally for a counter trend catalyst or for a real overextension for it to fail to follow through, and even just waiting for something as simple as like a first red day, or waiting for it to act weak, and then you can look at the sector and again decide if you want to go for a mean reversion on the most overextended name, or if you want to go after relative weakness in the sector and attack that one. So those are a couple of different watches for the week ahead. We covered a lot. Hopefully this scan was helpful for you. We talked about different market cycles. We talked about a bunch of the in-play names and the movers, and this is really what we do in Investors Underground. Myself and we have multiple other moderators who have a lot of market experience, are basically scanning, finding their best ideas, and then sharing them in real time. Saying what their idea is, where they want to potentially enter, and what they want out of the trade. So if you're interested in that kind of information, definitely check out Investors Underground, and we will see everyone in the week ahead. And I hope that everyone trades them well. Take care. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.